Hey everybody, I want to come back out. We've got such a response from the Andrew Raines video regarding the syndications and the funds and the PPMs, and so I want to bring him back in and give you a little more detail on the documents that you're going to need and kind of the processes that are going to be involved. So Andrew's going to come back in, so stay tuned and let's hear what he has to say.
If investors are coming into a syndication and the manager is raising money, especially friends and family, but regardless of that, the manager is responsible for making disclosures and sometimes reps and warranties to their investors regarding what they're investing in. Right. And those disclosures are very important. Those disclosures have to be based upon the information that a lawyer advises the manager or the promoter of the syndication concerning the property. So you need to make sure that the information is accurate from beginning to end. Otherwise, at any point in the chain, there could be legal problems, either for the investor or for the broker.
Yeah, you don't want to go online and pick out these documents to do a syndication. You want to get a good attorney involved, and don't get a discount attorney. Get to somebody that's very experienced in this. And we've run across it a number of times. You want to make sure that they've dotted their I's and crossed their T's across the board. Now, if you're doing a syndication, what can you just kind of give us a rough idea of the paperwork that you would need?
Yeah. So a syndication, think of it as a fundraising vehicle. And in order to raise funds for an investment, the general principle is that you have to have full disclosure and you have to reveal the information. And then you have to explain to an investor how much money they're putting in and how they're going to get a return on that fund through the property. So that structure involves a number of different documents. One of the documents is a private placement memorandum, or PPM. What a PPM does is it describes the property, often has pictures of the property, market information, and describes the business deal of the property and what the company, what the LLC or the manager is asking for in terms of investment. We need $10 million. We look at that being 80% of the money that we need, or 60%. We're going to be getting a loan for the rest of it. It's really the business elements of how this property is going to be acquired and what the investors will get. The investors will also get a return, so the private placement memorandum will spell out how much money goes back to the investors and whether that goes back upon a sale, upon a refinance, or something else that we would call a capital event. With the PPM comes an operating agreement. That operating agreement is the structure, the entity that buys the property. So the investors invest, that investment's described in the PPM, and then the entity that they invest in is the company, which is described in the operating agreement, and that company buys the property, and then the cash flow from the property comes back to the investors, and that method of distribution, which is often called a waterfall, is usually described in both the PPM and the operating agreement.
I even understood that, so well done.
Awesome. Me too.
Yeah, that's good.
Yeah.
Thank you for tuning in today. I felt that was a good one. I think we've got some good information out of Andrew. Again, if you could, subscribe below and send us comments. Send us some comments. If there's other types of videos you'd like us to put together, I'll go out and dig somebody up and bring him in here and drag him in front of a camera for you. So I'm not beneath that at all. So again, please subscribe and enjoy. Thank you.